Alright, hi everybody, welcome to the CY show. We have Darren Goldstein again here today. We're continuing our series on the buying process, and today we're going to dive into credit.
My name is Cesar Yanez and you're watching the CY show.
Darren, why does credit matter?
Yeah, so great question. So credit, it's important in the real estate transaction for qualifying specifically because your credit score largely determines what your interest rate is. So the higher your credit score is, the less risk really the investors, the lender sees in the borrower. So therefore the interest rate is a little bit better for every 20 points or so.
Oh wow.
So point being, someone with a 640 is typically the number we're looking for.
Okay.
And so every 20 points from 640 to 660 to 680 to 700 and so on will help you in what your interest rate is. And that's the important part about credit in the process.
Wow, so credit is very crucial, you would say, yes?
It's important, yes, it is.
Okay, and Darren, I'm sure you get this a lot. You know, how does credit affect the monthly payment? I mean, you're talking about how, you know, if you have a lower credit score, you're going to have higher interest rate. So,
yes. So yeah, a lot of times you'll see out there a bank or whatnot, or a lender will throw out an interest rate, right? And you'll see that interest rate and it'll be low. And a lot of times what you'll see in those ads are those interest rates are, they're assuming you have a 740 credit score and you're going to put 20% down. Now, for certain borrowers, that works and that's great, you know, and that's the truth. But in reality, every 20 points, so your interest rate, if you had a 740 credit score, you would get a certain interest rate. If it's a 720, it might be a little bit of a hit to 700 and so on. So a great way to explain what I'm really talking about to understand it also is we had a client in escrow in the middle of a transaction. We were able to raise their score while we were in escrow from a 700 to a 720.
wow.
And they saved over $120 on their monthly mortgage payment for 30 years. So, you know, that's a big deal. And that's important for us as a lender and lenders in general to be able to look out and see how can we change that credit score even in escrow sometimes where we will help the borrower.
Wow, that's very good to know. So every 20 points, you can save some money by getting a lower interest rate.
It will help your, yes,
Awesome,
your situation.
awesome.
Yeah.
Darren, what about, I don't know, what's a good rule of thumb, or what's a good credit score and why?
Yeah, so good question. 640 is really a credit score that we look for, and that puts you in a good position to purchase. So that's not to say you can have a lower credit score. You'll see advertisements out there at 580. So a 580 credit score for an FHA loan, which maybe we can tackle later. But the thing is anything below a 640, there are what's called overlays by lenders. So there's certain things, like someone might be able to get a mortgage that has a 580 credit score, but you might have to have 6 months of mortgage payments saved up, or 12 months of reserves. In certain aspects of a higher down payment per se, there's just certain parts that that you need to be aware about as a buyer to go, well, if this lender's telling me 640, if Darren's telling me 640, and this lender's saying they can do it for 580 to get me in the door, just know to ask those questions. Are there other things that I'm going to need to have, fiscally, financially, to make this work at a 580 credit score? So point being, 640 is the number we look for, and really it's what can we do at that 580 or 500 to help get the score up.
Got it. And Darren, I'm sure there's a lot of people out there that are late on their credit card payments, and as a result they have a low credit score. So in what ways do you help your clients in getting their credit score up, improving their credit score to get approved?
Yes, so we're happy at no cost to your clients, to our clients, through our company, to help people. It's not about, our whole philosophy is it's not a matter of if, but when. So I want people to see the light at the end of the tunnel. So a lot of times we'll talk to borrowers who their score might be a 500, might be a 450. They've had hard luck, whatever's happened with late payments. What we do So after the initial pre-qualification, we run credit, we take a look at credit. Let's say someone has a 500 credit score. So what we do is we plug their credit report into a system that our company, Cherry Creek Mortgage, provides at no cost, and we will plug their credit report into a system. It's called like a credit analyzer, a what-if scenario system. And what we do is we see all their debts, and we go, what if they pay this credit card down $100, $200, or a zero balance? Or what if they remove this late fee? Or what if they, different certain scenarios that we can play with on their report, and then we can play with the amount of time. So if they change 4 credit cards from $1,000 balances, so $4,000, $1,000 each card, down to a $10 balance or a $500 balance, in 1 month it'll raise their score 60 points, or in 2 months it'll raise their score 60 points, or whatever it might be. 1 year it might do it. Point being is we can play with that credit score and let them know where their score can be in the amount of time. Like we worked with someone over a year, and we took their score from I think it was a 440, 450, over a year, put them into a 640. They qualified for a down payment assistance program, bought a $300,000 home, came in with $0, and it was a long-term plan that we all worked together, and it's just, we're grateful to be able to do that.
That's awesome. That's a great tool to have, and I think with you guys providing to your clients this credit knowledge, these people are gonna relay that information to their kids, and their kids are gonna be better with credit, and I think it'll make just the economy better and the country better.
Absolutely.
With less debt. So I think it's very good what you guys are doing with providing that knowledge and helping people out, with their credits out.
Yeah, well, we're happy to do it for your clients and for our clients all across the board. It's not a matter of if, it's when.
Of course. Well, if you guys have any questions for Darren, any credit, getting approved to get a loan, I'm gonna have his contact information below. So I hope you guys like the content. This was credit. Very good information, Darren. Thank you for having me.
Yeah,
for being here again.
Yeah, of course.
And we'll see you next time.